Hello. Hang on a second, guys. All right. Can you guys hear me? And can you guys see my screen? If someone can please type in the chat, that would be great. Let's see. Can you guys hear me? Okay. Select. All right. Can you guys hear me right now? Can somebody just type out, please, if you can hear me? What am I missing? Let's see. That's not it. All right, so I guess you guys can hear me. I just got a message. I'll wait about a minute or so, and I'm gonna get started. Basically, this is Futures Basics. If you've been through this before, it's pretty much the same stuff. I did get some new people asking to do this, so I am just finishing something up quickly, and then I'll get started. Present review. Okay. I can't see our Fenstra, yeah. I'm not sure. I can't see anybody responding. That's crazy. Let me see if I can pull up the chat again. No. Show and stream. Yeah, there's nothing. Not sure what the deal is, but that's okay. As long as you guys can hear me. So I'm trying to figure out a way how to get that chat to work, because I will answer all of the questions at the end. So I'm gonna have to figure out how to do that, since it's not showing up on my end, which is really odd. I'm trying to see if maybe I have like a setting or something that I didn't know. Setting chat. Yeah, it's working. That's, yeah. All right, let's get started. All right, so my name is Jasmine, and I will answer. This is basically futures basics. If you've never traded futures, basically, I'm going to go over everything that you need to know, how to get started, whether you're trading it with your own capital or prop firm accounts, whatever it is. I'll go over all of that. There is a little link. It's called Gleam, and two people from tonight, I'm going to do this drawing at the end, will win a 30-day free trial at the Traders Wealth Lounge Discord, where we are live all day, pretty much. There's five, no, yep, there's 5 analysts. Had to double check that, plus a few others that contribute. So let's get started. If you want to follow along, you can go to propfirmtrend.com and click on the it's called the trading resource. This is all free, guys. There's no credit card needed or anything like that. It's just you just sign in, click on the trading resources, and it's this little button here, or this here where it says futures trading basics. And then there's also a little summary, if you guys can see. You can kind of go back through if you didn't, if you get a little bit overwhelmed and need to kind of have a little cheat sheet. So, and you can also take a quiz at the end if you want. So let's get started. Okay, so basically, futures trading. So what are futures? Futures trading is basically a contract between a buyer looking to invest and a seller where the contract is made for the future and has an expiration date. There are two participants. We have hedgers and speculators. So hedgers protect their assets from risks, and speculators are usually floor traders. So as floor traders, or as retail traders, we are considered speculators. Futures contracts are available on different assets, such as equity index futures, interest rate futures, commodity futures, currency futures, metal futures, and they all have expiration dates. Your broker, whether you're trading with like NinjaTrader or Tradeovate, AMP, even like TradingView, they will prompt you to roll over the expiration date. So you can kind of looks, it's going to say current expiry, new expiry. You just click yes, and that's it. Okay. So equity index futures, it's typically on a third Friday of every third month. So S&P 500 and NASDAQ, they expire quarterly. So right now we are trading the March contracts for NQ or NASDAQ and S&P 500, but it expires in March, June, September, and December. Interest rate futures, commodity futures such as crude oil, or like you're trading gold or silver, those expire monthly. So again, you'll have like a little prompt. It's going to tell you to, just roll it over. So basically the purpose of this is to teach some of the fundamentals of how futures work, how you can trade them on your own account, and how you can get a funded futures account, since I believe that many benefit from adding a futures trading to their skill set. So some of the common key terminologies that are used in futures trading, you don't have to memorize these, but sooner or later you're going to know what they mean. But lot or contract basically is unit of the instrument, and that's it. Tick is the smallest price movement that a futures contract can make. Point is a $1 move or one handle. Globex is basically an electronic trading platform used for derivatives, futures, and commodity contracts. Traders also use the term Globex to mean the overnight session of the market. So if somebody's trading right now, which it's the Asia session, they're going to say, I'm trading Globex. Okay. RTH is the regular trading hours for the specific exchange, which typically is around, during the New York Stock Exchange Open. Let's see. Contract month is the month in which a futures contract expires. Margin is the amount of money required to be deposited by a trader to open a futures position. All of these are fairly self-explanatory, but I want to kind of go over that. So first off, the market is essentially futures. So we frequently discuss ES, and the S&P 500 futures are those. Although these futures are traded similarly to other derivatives, apparently it's not derivatives. Sorry, guys. English is my second language. Leverage is what they offer above all else. Futures trading is simply a very leveraged form of stock trading. So to contrast with futures, an E-mini S&P 500 contract offers roughly 32 to 1 leverage. So because ES trades in ticks, which is aka a 0.25 spread, one contract changes value by $12.50 for every 0.25 it moves. So you gain or lose $50 when ES moves 1 point. So if ES changes by 10 points, you either win or lose $500. And then a tenth of an ES contract is a micro, which is MES. So instead of the $50 per point for ES, it's $5 for each point for MES. So it's the same, simply the same stuff, but it's 1/10 of the size. So futures trade more like shares compared to options. So there's no theta, there's no IV. Stop losses can be placed at precise price points, and each futures contract has its own specification, including the size of the contract, the tick size, minimum price movement, and the delivery date. Let's see. Sorry, I just got I had to respond to something quickly. All right, so micro E-minis, like I said, it was the 1/10 as small as the E-mini contracts are the same. So if we look here, one ES mini contract changes value by $12.50. For every 0.25 it moves, or $50 per point, and one MES or micro contract changes value by $1.25. For every 0.25 it moves, or $5 per point. Whereas NQ changes value by $5 per tick, or $20 per 1 point, and then the micro version of it changes value by 50 cents per tick, or $2 per point. However, if you look at CL or oil changes value by $10 per tick, or $10 per 0.01. So each penny is a tick and it's worth $10. So if oil is trading at $60 and it goes from $60 to $61, so that $1 move is actually $1,000 in futures, because every single penny that it moves is actually $10. That's why it's important to play with the micros. So futures market is open 23 hours a day. You must close out your positions by 4:59 p.m. Eastern if you're trading on, day margin or funded prop counts. It opens Sunday at 6 p.m. and closes Friday at 4:59 p.m. And best times to trade are during the New York Stock Exchange market open, or during European markets, which is in the middle of the night. Also, you need to check during the holiday, as the hours may vary. So, for example, Martin Luther King, futures opened Sunday night at 6 p.m. and we closed at 1 p.m. Eastern. So and then reopened back up at 6 p.m. That night. So we don't actually follow the New York Stock Exchange schedule. That goes for other, holidays. So you want to check that. This right here is a comprehensive futures contract specification. So basically, it's going to tell you the description of the futures, the ticker, and then also the minimum tick size. So as I talked about, ES or S&P 500, it's 0.25, whereas if you're looking at silver, it's 0.005. So knowing these minimum ticks is crucial. Like oil, I just talked about, it's 0.01. And how much it moves, per these minimum ticks. So, all right. So what I want to kind of cover is that when people start trading futures, a lot of times many new traders are going to jump straight into trading, the mini version. So ES, NQ, not the micro version. But, they're thinking, hey, I'm just trading futures. But the risk is equivalent to trading the full index value. So they don't realize that trading NQ is like trading NDX, and trading ES is like trading SPX. So if you're an options trader and you're trading, SPY, and then all of a sudden you come to futures and you're trading, ES, that's like basically trading SPX. So what most should start out with is trade the micros, which is basically like if you're trading NQ, it's basically like trading, sorry, not NQ, MNQ, which is trading like QQQ. And if you're trading SPY, then you would want to do MES. So that's kind of how you gauge how to trade these. So it's basically 1/10 of the risk, and you don't trade NQ when your account size says, hey, you should be trading MNQ. So, and also you don't want to trade ES when your account says it should be MES. So what ends up happening is a lot of people over leverage, and that's how they blow their accounts. So, like I said, if you were trading options, you came in and you basically all of a sudden started trading SPX or NDX, you would blow your account really fast. I don't even have to tell you guys that. So, okay. Alrighty. So, different ways of getting funding, and funding your own account with your own capital. So, you can start out with trading micros, which cost roughly $2,347 for an MES lot, and about $23K for a 1ES lot. That's on TOS, or if you're using like Interactive Broker or something. You want to check with your broker how much capital you would need for these. Or you can use a broker that specializes in futures, such as NinjaTrader or Tradeovate or AMP. Instead of the $23,448 for the traditional broker, Tradeovate offers a $500 to $1,000 day trade margin for E-mini contracts. Micro contracts are even more affordable because MES costs only $50 day trading margin, and MNQ costs $100. So this is for the day trade margin only. And then I'll explain the difference with what the full initial margin is. Okay, let's get here. So basically, the distinction is that when you purchase or sell a contract, you're not purchasing ES shares. Therefore, it costs the same amount of money to buy or sell one contract, regardless of the price at which ES is trading. And margin is the term for that. So, if you use a broker that specializes in futures, as a result, it's actually fairly affordable, making it a great choice for those that feel comfortable trading their own money. And also margins do change based upon a news event. So you want to check with your broker on margin specifications. Okay, so if you see here where it says day margin and then initial margin on the left side, we've got the day margin, right side, we've got the initial margin. So basically, Trade-O-Eight and NinjaTrader and a lot of these firms or brokers, not firms, that offer specialized futures trading, they have reduced margins for both the day trade or for the day session as well as the overnight session. So intraday margins are available from 6 p.m. Eastern until 4:45 p.m. Eastern the following day. Initial margin, which is this part here on the right side, is required from 4:45 p.m. Eastern until 6 p.m. Eastern. So if you're trying to hold a position into close, or like, you want to swing over the weekend, then you need to have the initial margin. So one NQ is $33,000. But if you're just trading, you can trade almost 23 hours. And if you close out your position by that 4:45 p.m., then all you need is the day margin. So as a scalper, as a day trader, I don't need to, have $33,000 for trading, 2 NQs, for example, because I can utilize the day margin instead of the initial margin. And that's kind of how most people do it. So I don't, just to hold for that hour and 15 minutes, this is the amount of money you'd need to, put in your account. Unless you're like a swing trader, and that's fine. You can also, use micros, but that's, let's see, trading prop firms. Okay, so I gotta tell you guys something because it's so I have severe stage fright, and about an hour ago I took an anti-anxiety medicine, and I wasn't sure if I actually like took it, and then I took a second one, so I'm like a little loopy. I'm so sorry, you guys. I'm like I just have to tell you guys that because okay, all right, I'm done. Trading prop firms utilize a finance partner, also known as Tradeify, Apex Trader Funding, Take Profit Trader, or like, the Futures Desk, Top Step, My Funded Futures. There's so many out there. Um, you know, uh, Tradeify, for example, has a 1-day pass. They also have a straight to funding, which means you skip the evaluation. Top Step has a 2-day minimum evaluation where you can be funded in as little as 2 days. Take Profit Trader has 5 days for the evaluation, but once you're funded, then you can withdraw your money daily. So basically, how it works is you demonstrate to the prop firm that you are a successful trader. You must pay to enter the evaluation, which is a sim. And if you succeed, you will then be given a funded account to trade with. So you pay the activation fee. Also, some firms don't have activation fees. It just depends on the accounts and the prop firm. You keep all of the proceeds up to 25,000, and you keep 90% of the profit after the first 25,000. This is from Apex. You earn while they keep 10%. So you want to check with the prop firm rules, whatever prop firm you're utilizing. Some people get multiple accounts when it's on discount, so they can trade them at the same time. There is a trade copier you can use, and each account must pass the performance evaluation. So is this too good to be true? Not really. Most traders fail due to lack of discipline. And this is how these companies make money. Whether you're trading options, crypto, equities, futures with your own capital, with your grandma's money, whatever it is, the sad truth is that 95% of traders fail. And, if you can trade the chart, such as the price action, you can stay disciplined and consistent, then you're going to make money. It's, the worst thing that can happen is that you lose your account evaluation fee. You do not pay back any capital. You can also take these evaluations as many times. It's not just once and that's it. So, and you can also trade your own funded accounts like on NinjaTrader with your prop firm accounts. So, for example, like I can trade all like different prop firms simultaneously. It's with the trade copier and my personal account. It's one click and it duplicates it in all of my other accounts. So basically, if you just want to test out, although they have very tight, regulation, you're essentially forced to have good habits by these rules. I would say that getting a prop firm account, or also you can also go to like tradeovate.com or ninjatrader.com and get a demo. It's a free demo account to play with. So let's see. So why prop firm versus trading your own money? And this right here is from Take Profit Trader. So simply put, most traders are undercapitalized. You level the playing field by using their accounts and not your own funds. Trading with your own funds can lead to severe losses. However, with Take Profit Trader, your losses are limited to your associated challenge fees. A lack of discipline haunts traders, and the risk management system and rules will make sure you stay disciplined during your trades. And then all technology and account setup done by them. No more documentation. You get live data, all of the accounts, everything is provided for you. Okay. So this is actually, I posted something last night because there was a poll that I had, and I asked people to vote between, these accounts. And most voted for end of day trailing, which surprised me considering that static drawdown is actually the best. So it kind of told me that a lot of people don't understand what static drawdown is compared to the end of day trailing or intraday trailing. Okay, so I'm going to go. I have a few prop firms pulled up, so let's go to Apex Trader Funding. Okay, let's go to Tradeovate plan. Okay, so for example, for a 50K account, you have a profit goal of $3,000. Trailing threshold is $2,500. So it's an intraday trailing. They also do have a static account, which is only $625. It's a profit goal of $2,000. So if we go to Take Profit Trader, you're going to have similar, for a 50K account, your profit target is $3,000. End of day trailing is $2,000, so it's $500 less than what Apex is offering. But they have end of day trailing drawdown during the evaluation. Let's go to Tradeify. Tradeify has multiple different types of accounts. So they have a growth account, which is end of day trailing, 1 day to pass it. It includes the activation fee, so it's like an all-in price. Then they also have a select account, which is your profit target, end of day trailing, 2,000. They have a consistency of 40%, and I'll go over that in a little bit, what consistency means. But once you pass, so it can take 3 days for you to pass this, and once you pass, you choose whether you want to trade or get payouts daily or flex, which is like every 5 days, and it gives you kind of what the max payout is. There's no consistency once you're funded. And then they also have what they call what's called a lightning or straight to funded. So you skip the evaluation, you go straight into a lightning funded account. So basically, you can, if you trade this account after 5 days, you can request, a payout. Okay. Now, you guys need to do your due diligence and go through these rules and kind of, see how everything works, right? Futures Desk has some, which is my favorite, static accounts. So static accounts, basically, if you see here where it says trailing drawdown, the floor rises as your profit, is going up. Whereas static, it just stays, the floor stays the same. Okay, so they have oopsies. Well, I can't get in there right now, but you can actually customize these, so you don't need to. Um, they're customizable. You can change how many days for you to pass. You can change, the how many contracts for you to use, things like that. But once you pass, then you get into daily withdrawals with them as well. So I kind of want to bring those up just to kind of show you how different prop firms have different accounts and different rules. Okay, so what is intraday trailing? So basically, your drawdown moves with your balance and unrealized gains throughout the day, but resets to the daily starting balance each day. So day start 50,000, drawdown is 47,000. 10 a.m. you make $500 profit, which is 50,500. Your drawdown moves to 47,500. So let's say at 11 a.m. you make another $300, which is 50,800. Your drawdown moves to 47,800. 1 p.m. you open a position with $600 unrealized gain. So now you're at 51,400 unrealized. Drawdown moves to 48,400. Trails unrealized gains. Let's say at 2 p.m. you close your position for $400 realized profit, which is 51,200. Drawdown stays at 48,400 and it doesn't go down. Gosh, that thing is making me tired. Let's say at 3 p.m. you lose $400, which you're at 50,800. Your drawdown is going to stay at that 48,400. It doesn't go down. So the remaining drawdown is $2,400. The next day it resets to 50,800. So drawdown at 48,400, which is $3,000 from the highest balance, including the unrealized. Now, end of day trailing, basically your drawdown limit only moves up based on your ending balance at the close of each day. So 50K account, 3K drawdown. Day one, you're 50,000, drawdown is 47,000. Total drawdown available is 3,000. So let's say during the day you're up 51,500, then down to 50,800. Drawdown is going to stay at that $47,000 all day. The total drawdown available is 3,000 and it stays fixed all day. Drawdown updates to 47,800. Let's say the day closes at 50,800. So day two, it's at 50,800. Your drawdown is 47,800, which is $3,000 from the new starting balance. So total drawdown available is $3,000. Okay. Now, static account, static drawdown. Your drawdown limit is fixed based on your starting account balance and never changes. So same thing, 50K account with 6% drawdown or 3K drawdown, whatever firm you're using. So let's just say week one you grow your account to 55,000. Your drawdown is going to stay at 47,000. Let's say month 1, you grow your account at 60,000, your drawdown is going to stay at 47,000. Month 6, your account is at 75,000, your drawdown is still 47,000. So as you can see, the floor, that amount never changes. It's going to stay the same. Whereas these will move up with your balance, whether it's at the end of the day or during the trading day. Reality check, you can still lose $28,000, which is and still breach the account. So if you lost 28,000, you would breach the account. Compared to here, if you lost 3,000, then you would breach the account. So that's the difference between static. Now, I do want to make sure that you guys know that, like with intraday trailing, so for example, with Apex, once you meet your buffer, so let's just do the same thing, 50K account, 50,000, and it goes to, let's say you're 53,100. As soon as you get over the drawdown amount, which in this case it's 3K plus $100, your drawdown stops trailing. It becomes static. So it becomes this. So let's say you go up and you're up to, I don't know, 60 grand, just 10 grand, doesn't matter. You can lose all of that and still keep the account as long as you're not breached under that, where it stops trailing. So that's kind of the difference that I wanted to input. So here we can actually go and view the full. So there's a quick comparison table between these. You can kind of compare some of the payout rules, their evaluation rules, things like that. But if you scroll down, this is more of a detailed, comprehensive analysis. So let's say you're interested in I'm just going to say just static account. It's going to pull up the firms that have static accounts. Okay. And when you, so it's going to kind of tell you what the activation fee is, if it's customizable or not. Days in the evaluation, days for minimum days for a payout. And then you can also, if you click on full details, it will take you to their, this is more of a condensed version of like their website. So it will kind of talk about, more information, more detail. Again, you can click on that and it'll take you over so you can, view their rules and whatever. One thing, prop firm cost. Okay, so let's say you want to compare some of the firms that cost-wise. Let's just do Tradeify, 50K. They have a 40% off. Include the activation. Let's go to Top Step since it's a pretty popular one. 50K. End of day trailing. So both of these are end of day trailing. Profit target for the Tradeify account, which is a select account, is 2,500, whereas Top Step 50K account profit target is 3,000. Both, like I said, are end of day trailing. And this is it's $49 for the evaluation with Top Step. However, once you pass, they have an activation fee of $149, which actually makes the price $198. Whereas with Tradeify, and also the difference between these two accounts, with the select account, it takes you about 3 days to pass. You need at least 3 days. It can take you 10 days, 20 days. It doesn't matter. It's not, you do not have to pass it in 3 days. Top Step, it is, you can the minimum days is 2 days. Okay, so if you kind of see, what the price is, you can compare. And you can also add more firms here. You can add the same firms, and I don't know, maybe you want to check the difference between a 100K account or a 150K account. So just kind of you can play around with that with all of the firms and see what it does. But and risk calculators. So this is really important right here, and it's the sizing. Anytime you get into trading with prop firms, or even if you're trading your own money, as far as when it comes to futures, sizing is the most important thing. Futures are very volatile and very risky. So, a lot of people blow their accounts because of this reason. Anytime I blew my account, it was because of this reason. Over leveraging. Okay, so let's say you have we're going to use a account size. So account size, you're not, if you get a 50K account, or if you get a I don't know, whatever account that you get, 100K account, 150K account, you're going to use the drawdown amount to calculate this, because that's actually how much you're available that you have. So let's say $2,000, and you are trading, let's say MNQ. Configure how many your stop loss is. Is it 10 ticks? Or sorry, not ticks. Yeah, ticks. So is it 50 ticks? Is it 70 ticks? Whatever it is, it will risk. You want to add at least, so anywhere between, I don't know, there's different, it's subjective, but I would say anywhere between 3 to 4%, 5% only if you have like a higher, pretty good setup. So as you can see, you go in with 4 contracts, okay, of MNQ. And that's if you have a 50 tick stop loss. If you have a 70 tick stop loss, then, look at how much it changes. So the higher the, obviously your stop loss, then this number changes. What I see, and what most of us see when I talk to, others, is they'll say, hey, I blew my account, and I'm asking, okay, well, what did you use? What did you trade? A lot of times they will say that they traded NQ or ES, which is the full size, okay? Let's say, I mean, basically, even if you're risking 5%, that's 0 contract. But what they're doing is risking 25%, 50% of their account per trade. It only takes a few trades for you to blow your account. And you can actually go down here and kind of check out your account blowout calculator. If you're risking $200, it's pretty risky for a $2,000 account. If you do 100, it's moderate. If you're risking 50, it will tell you how many losses you can have before you bust your account. And then the consistency calculator. So that's one thing I want to talk to you guys about. Top Step, for example, has a 50% consistency to pass their evaluation, and Tradeify has like a 40% consistency on the select accounts, but on their growth accounts, they don't have consistency on it. So what does that mean? If you are trading, I'm going to just use Top Step for ease of this. Consistency is 50%. And basically no single day of profits can exceed this percent. Okay, so if you have a $3,000 profit goal of that 50K account. So let's say your biggest day is $1,500. So if you make $1,500 today, $1,500 tomorrow, that's gonna, equal the profit target. You're gonna be just fine because you are under 50% or at 50%. But let's say you make $1,700 and in one day, the consistency rule is 50%. Now you need to make $400 more. So if you just keep it, below that, then you will be just fine. And then down here, you can, this is the calculator, guys. You can go in and input the growth calculator, just kind of if you're using 2 to 1. So another thing is the risk to reward. If you're using 1 to 1, you need to have a higher percent win rate to be able to be profitable. If you are, your risk to reward is more. So 2 to 1, to break even win rate, you need at least 33%. So just kind of know that what you're risking, check the profitable setup. And then down here, I don't usually dollar cost average in. I don't scale in when the trade goes against me. The only time I do the DCA is when I have a trade that's called a far from moving average trade. It's a highly probable setup, but sometimes it takes, I can do a starter position. And even if if it's going against me, I'll add in because it's a highly probable that it's a reversal is imminent. So if you know those V-shape trades, so like today we had that. I took a nice short. I think we dropped 200 or 300 points. But that is the only place I would do this, the dollar cost average. You can come in this little thing, and it doesn't matter if you're long or short, but if you put your entry price, I don't know, let's say 26,000, and you want to dollar cost average in every 10 points, you can do that. It will tell you if you're doing conservative what your average is going to be after every 10 points if you're adding one, moderate. If you're doing a pyramid where it's like 1 1, then 2 2, 3 3, it will also tell you kind of how many points and things like that, aggressive. So you can play with that instead of just, if you are doing the dollar cost average, you don't want to do like 2 here and then 2 points later, 5 here, and like just all over the place. You want to have a mathematical version. So you guys can go into this. It's called trading calculators, or risk calculator. Sorry, guys. Also, another thing you guys can come in here is trading journal. Also, all of this is free, by the way, but you can import your trades. You can do a CSV import from Trader8, NinjaTrader, whatever, and it will kind of help you. Will show you what your consistency is, what your win rate is, what your average trade is. So it's a journal you can keep, and there's also a growth calculator to kind of help you understand the risk to reward ratio and how to grow your account. So, basically, if you risk $500 to make $1,000, that's good because that's that 2 to 1 ratio compared to, a bad example is if you risk 3% to make 1%, you would need a 75% hit rate or win rate. Whereas like if you risk 1% to make 2%, you only need a 35 to 40% win rate. So you can do that. Also risk, no, that's not it. There's a little psychology lab if you guys want. You can kind of track your emotions. You know, if you're confident and calm, you know, versus like if you're anxious and greedy, it's going to start to tell you, you know, you're at an elevated risk. Proceed with caution. If you are, you know, if you got more of these, it's going to say like consider not trading today, you know, and then you can input your little bias if you have any, you know, following the crowd without analysis. Kind of input your little journal thing here. What did I just do? So it will kind of give you, you know, a pre-trade summary. Um, and then later on, when you're done, you can kind of put in your post trades just to kind of journal and see when you start to see your emotions. So, like for example, for me, I get bored if I'm at my desk or at my computer when I'm like during lunch hour. If I have temptation out of boredom or whatever, I'll get into a trade. And even if it's not my setup, or maybe I think it's a setup, um, it's you know, you've got to recognize that and work on that emotion, because at the end of the day, it's going to be just you against you know, trading. uh, so if you know what your triggers are, you know, what I end up doing is I end up going to Pilates. So I'm not, you know, at my desk during that time. Let's see what else. Oh, also, guys, I am there's an order flow course here. I use order flow footprint, so there's course all of this. It's still in works, or I'm still working on it, I should say. Oops, that's not what I wanted. But yeah. So that's kind of what it looks like. You do not have to trade with order flow footprint when it comes to futures. Most don't trade with that. I've been trading with it for over 3.5 years. I have noticed that there's been more of an uptick of people using order flow footprint. It just gives you more confluence around your key levels. So it kind of lets you see what's inside of a candle, what's going on in there, that kind of a thing. All right, let me go back and then I'll okay, hang on. Okay, so this right here is called Project X platform. If we're going long or, you know, obviously would input, it kind of looks like a trading view. If we're going long, obviously you would, you know, whether it's join bid or buy market. If we're going short, it would be sell bids or sell market, join ask, flatten all, cancel, that kind of a thing. You know, just, you can play around with it. It's pretty simple as far as like platforms go. This right here is NinjaTrader. I use NinjaTrader just because I have a lifetime license with them, so I can add all of my prop firms together in one and my personal account and just trade them all at the same time. And then Tradeovate. So NinjaTrader owns Tradeovate, so you can actually kind of use them. This is what Tradeovate looks like. Same thing, buy market, sell market, buy bid, sell ask. ATM is basically where you would input your stop loss. or take profit, but specifically stop loss. I do have to say that, guys, it's so important to have a hard stop loss when you're trading futures. As soon as you get in, or before you get in, have a stop loss, because we have seen candles within seconds that will come through, and it will be 100 points in milliseconds. By the time you try to close out your account or your trade, the account could be blown. So there's no PDT or anything like that. You can get in and get out of your trades. It's not a big deal. If you get stopped out, that's okay. Even if it goes back to where it was, that is okay, because um, there are times when it doesn't go back. So, like today, for example, out of nowhere, if people were short, out of nowhere, we got that Truth Social Media from Donald Trump, where we popped like 300 points pretty fast. So just to kind of tell you guys. But basically, the key takeaway from all of this is to know that if you can trade the chart, whether you're charting SPY or QQQ or Apple or Nvidia or whatever it is, whether you're using Fibonacci's, moving averages, any of that, you can use the same technical analysis when you're trading futures. Another thing that I do is, so let me go back to trading resources. So the first thing I should say I do is I check the economics calendar before any trades. Some firms will not let you trade news, a minute before or a minute after, and that means CPI or FOMC. Some will let you trade it, but like a certain amount. So you have to check on that with different firms what they allow. And it's typically the red folders. So like the USA, not if you're looking at this is for Forex Factory. Okay, so tomorrow we've got unemployment claims at, well, it's actually 8:30. I'm in Central Standard Time, but it's 8:30 Eastern. Final GDP. So if a firm says not to trade during red folders or like at 10 a.m. tomorrow, then don't trade during that. That's something that you need to kind of figure out if they allow it or not. And then I have like Financial Juice in Discord. We have just the feed, real time of Financial Juice coming through, so that we can kind of see what's going on. Weekend tech stocks, I posted over the weekend what the NASDAQ was, and I got a lot of backlash from people saying, no, we're not going to be down and this and that. And I'm like, but we are, because the weekend tech stocks showed us what we were down. Needless to say, we were down like 300 points. So, and then another thing when I'm trading, like I trade NQ or NASDAQ for the majority of the part, ES is less volatile. If you when you, or MES, same thing, it's less volatile. It's not as crazy. But I watch the tech Mag 7, so I'll have like Apple and Google and Nvidia and Microsoft. I'll have it on a different screen. I'm watching all of those at the same time to see what's going on, because if they start to pull back, chances are so is NQ, so is NASDAQ. So let me open up something so I can kind of just show you guys the execution. Not that it's gonna, oh, what did I do? All right. So just make sure we are, okay, candles. Okay, so if you see here, if you go to like TradingView and you see how it says NQ1 exclamation. If you type in NQ, that's the continuous. You do not want to be on that. You want to be on the proper contract. Okay. So let's say we want to do let's do a replay. This is the DOM. All right, let's do sell market. I'm going to show you guys just how, obviously, see how it says 0.75, 0.00, 0.25, 0.50. So the spread for NASDAQ and for ES is 0.25, okay? So let's just say we want to take a short. This is just one contract. Okay, let's say that with the same thing we wanted to actually maybe we'll go here. Same thing, we're gonna trade NQ. Let's say in just one contract. And this is to show you guys how fast things can change. Let's do, okay, that's fine. Okay, look at that. One contract, you would be down 7 grand. Actually, up here was it was about 7 grand. Pretty fast when that news came through. So the point that I'm trying to make, guys, is really to size properly, okay? Because if you had a $2,000 port, you would have lost your port right there a long time ago. But this is why it's important to play with the micros. And then a little arrow here, March contract. So let's just oops. Okay. So these are micros. Let's say we buy here. Stop it. So with one micro, it was already up $600-700 in that. And most people, if you're looking at the proper sizing, again, depending on what your stop loss is, you can go in with 3 or 4 micros, 5 micros, again, depending upon your size of the account. So, but same thing goes if you're in the wrong, let's say you were short. So 1 micro, well, you would be down $700-800 just in mere, less than 30-40 minutes if you did not have a stop loss. And then ES. So ES moves $50 in leave, replay, start new. Okay. Let's do buy one. So this one moves in $50 per point. But ES does not have as wide of moves as NQ does. Okay. Take profit. So kind of same thing if we shorted, obviously, and then if we did the MES. So that's kind of the gist of it. It's really like there's no, like I said, there's no theta, there's no IV, nothing like that like you have in options. So, all right, let's see. Okay, hang on a second. Okay. All right. Oh, looks like I can see your guys' stuff right now. Do you guys have any questions? Your favorite is TFD. Yeah, my favorite static is also from the Futures Desk. Tradeify is really good too. I like their select accounts because I can pull out. Actually, they're 50. So I usually trade like 150K or 300K account because I can have more of a drawdown. But with Tradeify, their select accounts, you only need $2,500 to pass. And I just take like I use micros and I will play with those to withdraw daily. So okay, let me go ahead and draw. Quick draw, no. Wait, did I put in the wrong one? Maybe this one? Yep, okay. Okay, Satish and Stella B. Are you guys here? Okay, hang on. I'm not sure why the chat's not loading, guys. Thanks, Fenster. Is the chat loading for you? Yeah, I can't see the chat. Okay, so Satish is there. Okay, Satish just DM me. Okay, let's see. All right, I see Satish. Stella, is Stella here? Looks like we might have to redo a draw for that one. Repick winner. I don't know. For some odd reason, it doesn't let me do this. Oh, Donna M. Is Donna here? Donna. Okay, I'm gonna repick someone unless Nancy T. Yeah, I can't see the chat. Brent, I'm not feeling good. I am. I should have not. I taken. I can't see the chat though. Yeah, it's not showing up. But thank you, Fenster. Yeah, Brent. I've been awake since like forever, and I've been on my computer since this morning. And yeah, my medicine. Hopefully, I'll fall asleep pretty fast. Hold on. You sad, Brent? Yeah, I can see Brent in the chat right now. I can see you guys like right now. And here, I'll share it for you. But I can't see anybody else. This is where it started. She's not here. Nancy's not here. Okay, let's move on. That's all I see right now. Oh, that's you. You're already in there. Satish, you already got it. Rammy M. Rammy. Yeah. Well, it's not like I took gummies or anything. You guys should hear me doing that. Also, guys, I have quite a bit of giveaways on my page. Go whatever. I don't even know what the name is. Is it join the giveaway? I know, right? Rammy, come on down. Why are the same people being picked? Or don't sign up. See, Fence. Margaret W. You'll have better odds. I know. Is there Margaret here? No. Laura. It's a lot of female names tonight. That's okay, guys. Tag each other. Shit. Tag Elon Musk. I don't care. Margaret again? Oh my, why is my email going off, you guys? Every time I repick a winner, I get an email about who the winner is. Oh well. Okay, well, I don't know. Jamie Dimon, Mark Cuban. Ahmed. Is Ahmed here? Joshua W. Elon Musk. Paul L. I'm just gonna keep repicking in the first person that Anthony E. Nancy T. Fan N. Lord, right? Hey, you know what? You never know with Elon. Stella B. He wants to buy Ryanair. Yeah, he is from. I really. So stupid to say, but I swear I think he's a freaking alien. Paul L. All right, I'm done with this. Like, I think I've drew like 20 people and they're not here. So, all right, Satish, message me. Yeah, I mean, the thing is with this Gleam thing, it's got their names, not the usernames. Their Twitter usernames. So I have no clue who they would be. But that's all right. I'll do another one. Wow. Yeah. So anyway, guys, have a fabulous night. Oopsies. Thanks, Fenster. Thank you guys for coming. If I know how to hang up. Okay, there we go.